Hello, hello. Good evening. I pray everyone is doing well. Welcome to El Shaddai Life Team Study Sessions. I am LaSheila Jones, and I'm here to do part three of our study session. We left off on page 49. I want to apologize because I had some schedule discrepancies, which caused us to miss a few sessions. Nevertheless, I am here because I am committed to helping you study for your test. I want to encourage everyone to please log into your POL, log into your UCAPass accounts, and study there as well because you need to accumulate your time. And by doing that, you can get your certificate that's going to be needed to take your state exam. Please go into your UCAPass account and get caught up on your studying there and begin to take advantage of those quizzes that you can take on the inside and the study material that's there for you. I am on my 21st anniversary celebration. However, I'm still thinking about you. So I got some downtime and I'm going to do part three. So we left off on page 49 and here we are, and it says insurance. What should I know? Annuity terms. So it says immediate annuity. An annuity that bypasses the accumulation period with a lump sum of money and immediately goes into the annuity period. Immediate annuity. So that means it doesn't accumulate, it bypasses that period and goes directly to the annuity period, which is the period that pays out the money. Money can be received monthly, quarterly, semi-annually, but no longer than 1 year. Okay, that's an immediate annuity. So immediate annuity, what is that? It's going to pay immediately. It's going to bypass the accumulation period. That's what that means. What about a deferred annuity? Deferred annuity. Okay, it's an immediate annuity or level premium annuity that starts to pay deferred. I think I shared with you about the scripture that it says, hope deferred makes the heart sick. So hope that is put off, deferred means to put off. So deferred annuity, an immediate annuity or level premium annuity that starts to pay after 1 year. So it puts it off, defer, puts it off for 1 year. Usually in the distant future, such as retirement, if the annuitant dies before receiving any money, a death benefit must be paid to the beneficiary. Okay, annuity or pure endowment contracts. Annuity or pure endowment contracts can be reinstated within 1 year from default of the premium, can be reinstated within 1 year of the default of the premium, okay? Insurance company may terminate a deferred annuity if no payment is received for 2 years. That's a long time. Insurance company may terminate a deferred annuity. They already defer it, put it off. So it says if no payment is made or received within 2 years and the paid up benefit is less than 20 per month at maturity. All right. Insurance, what should I know? Qualify in non-qualified retirement plans, qualify in non-qualified retirement plans. Qualified plans qualify for tax benefits according to the IRS rules. Qualify for tax benefits according to the IRS rules, are tax deductible to both the business and the employee. So qualified plans, they are tax deductible for both the business and the employee. The investments qualify for a tax deduction from employees' current compensation. Investments grow tax deferred, put off, and are taxed as ordinary income when the money is taken out, okay? That's a qualified plan. Now let's see what the difference between a qualified plan and non-qualified plan. do not qualify for tax benefits according to the IRS rules. But what did qualify plan say? Qualify for tax benefits according to the IRS rules. Qualify for tax benefits according to the IRS rules. Okay. Non-qualified do not qualify for tax benefits according to the IRS rules. Investments are not tax deductible and are taxed as ordinary income tax. And when the money is pulled out of the plan, the advantage for businesses is that they can select two participants. Okay? See that difference? All right, insurance. What should I know? Kinds of qualified plans. Kinds of qualified plans. Okay. Let's see what we're talking about here. Kinds of qualified plans. Defined benefit plans, a promises made for the future. Have benefits that are predetermined, defined benefit plan. Promises are made for the future, have benefits that are predetermined. Okay, so defined, it's already defined, it's already predetermined. Company must fund a plan to reach the defined benefit goal and is subject to vesting, 100% vesting after 5 years is mandated by law. Okay, this is a defined benefit plan. So a defined benefit, when you benefit from something, you're on the receiving end. So defined contribution, let's see what it says. A promise is not made. Okay, wait a minute. Defined benefit, a promise is made for the future. And it has benefits that are predetermined. A defined contribution plan, a promise is not made for the future. Benefits will vary based on the level of what? Contribution. So if I contribute to something, I'm giving. If I benefit from something, I'm receiving. We ain't thinking too hard on that. Defined benefit, defined contribution. They told on themselves. Defined benefit, benefit. I'm on the receiving end. Promises made, right? Defined contribution, promises not made. Benefit will vary based on the level of contributions and the success of the investments, and is subject to vesting 100% after 5 years as mandated by law. So this is how you study. This is how you break down material. This is how you implant, deposit knowledge into your brain. You take something to help you identify with what is being asked of you. So a defined benefit, I'm benefiting, I'm receiving. Contribution, I'm giving, I'm contributing. Okay. All right. Insurance, what should I know? Defined contributions plan. There is that word again. Defined contribution plans. What are defined contribution plans? Contribution plan, I'm going to assume that it's meaning that I have to contribute something, but let's see. 401k employees tax deductible contributions are what? Matched in part by the company. So you give, the company matches what you give. That's a 401k, right? All employees to borrow from plan, allows employee to borrow from plan. So 401k, we're talking about contribution plans, right? 401k employees' tax deductible contributions are matched by the company. That's it. Allows company employees to borrow from the plan. So you can borrow from your 401k, right? Okay, IRAs, earned income contributions may be tax deductible. Taxes are paid on the what? Harvest. When you harvest something, that's when you're gathering, right? All right. We ain't thinking too hard on that. IRA, Roth IRA, IRA, Roth IRA, Roth IRAs after tax earned income contributions are not tax deductible. IRA's earned income contribution may be taxed deductible. Taxes are paid on the harvest. Roth IRAs after tax earned income contributions are not tax deductible. See that? So you find a difference between the two. IRAs, okay. Tax deductible, taxes are paid on the harvest. Earned income contributions may be tax deductible. Roth IRAs after tax earned income contributions are not tax deductible. Grow tax deferred contributions are not taxed. All right, SEPs, 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 Simplified Employee Pensions. Simplified Employee Pensions. Contributions are limited to 25% or 40,000, whichever is less. See www.irs.gov for the most current limits, okay? Maybe a 401 or an IRA. I'm getting tired tongue on that IRA. Okay, so simplified employee pension contributions are limited to 25%, okay, or 40,000. Insurance, what should I know? Define, spelled out, define contribution plans. KEO plans, self-employed income, maximum employee contribution, lesser of 30K or 25% of employees' compensation. Okay? Don't think too hard about it. That's KEO plans is dealing with self-employed income, right? First thing first. Maximum employee contribution lesser than 30K or 25%. Okay? All right. Tax deferred annuities, tax deferred annuities, 403B, teacher retirement, TSA, tax deferred annuities. We know that's talking about teacher retirement, TSA. Let it go. Okay, let it go. Rollover and transfers allow funds to be moved from one qualified plan. Rollover, 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 and transfer. Rollover, rollover allow funds to be moved from one qualified plan to another without tax consequences. That's so easy. That's so easy. 1035 exchanges. 1035 exchanges are used to move non-qualified funds from annuities to annuities, insurance policies to insurance policies, even from insurance policies to annuities, but not from annuities to insurance plan. We ain't thinking too hard on that. Listen at this. Used to move from non-qualified non-qualified funds from annuity to annuity. So it can go from annuity to annuity, okay, from insurance policy to insurance policy, even from insurance policy to annuity, but not from annuity to insurance. That's all we're worried about. You can go from annuity to annuity, insurance to insurance, insurance to annuity, but not from insurance to annuity. You saw how I said that without looking at it. But not from annuity to insurance, but not from annuity to insurance. All right. Okay. Business and group life. Business and group life. Business uses for life insurance. Group life insurance characteristics. Okay. Sole proprietorships. Sole proprietorships. Business is owned and operated by single person. So one, right? Sole proprietorship, business owned and operated by one soul, one single person. Partnership, business is owned and operated by what? Two or more. Cooperation, separate legal entity from people who run the company owned by stockholders. Cooperation, separate legal entity from people who run the company owned by stockholders. Easy peasy. Easy peasy. Okay, life insurance and business usage. Life insurance and business usage. Buy-sell agreement. What's a buy-sell agreement? Insurance policy, death benefit, proceeds can be used to fund the purchase of a deceased partner's portion of the company. Buy-sell agreement. We're talking about insurance. We're studying about insurance. Buy-sell agreement is an insurance policy death benefit proceeds that can be used to purchase a deceased partner's portion of the company. We're not thinking too hard about that. From the other partner or relative, okay? Key employee, key. Hey, love is key. Key employee, a person that if deceased would financially hurt the business. Key person, main thing, the main person of importance. If this person passes, the company will suffer. A person that is deceased, if deceased, would financially hurt the business. And insurance policy can be purchased on this person to protect the company from this financial disaster by providing funds to be used to replace the individual. Hello, somebody. Key employee. Don't think about it. Let it go. Employee benefit. Benefit, receive. Employee benefit. Going to be benefits received by the employee. Let's see. Employees can invest in life insurance and annuities as part of their salary deferred compensation under IRS Code Section 457. Don't think about it. Don't overthink it. Don't overthink it. You're going to remember that. Employee benefit. Benefit. Employees can invest in life insurance. We're talking about life insurance. We're studying about life insurance. Employee can invest in life insurance and annuities as part of their salary. Employee salary, right? Don't worry about it. Executive bonus plan. Non-qualified employee purchase life insurance with a bonus that equals the premium paid each year. Executive bonus plan. Non-qualified employee purchase life insurance with a bonus that equals the premium. That just told on itself. Did y'all hear that? Listen. Executive bonus plan. A non-qualified employee purchase life insurance with a bonus that equals the premium paid each year. Voila! Don't even think about it. Group insurance types. Group insurance types. Employer groups, 10 or more employees at a time of coverage. If less than 10, it is a baby group. Okay, employer groups, 10 or more employees at a time. That's how they get their coverage. Got to be at least 10. Got 10, it's a go. If it's less than 10, it's a baby group. Okay? Multiple employer trust. MET, multiple employer trust, several small companies, multiple employers, multiple employers, multiple employers, multiple employee trust. Several small companies who have banded together to form a larger group. Come on, y'all. That was easy peasy. To form a larger group to get better group rates. Right? Multiple employee welfare associates, MEWA. Multiple employee welfare associates, MEWA. Labor organizations must have a minimum of 25 members at the time of coverage to obtain insurance. Labor organization must have a minimum of 25 members at the time of coverage to obtain insurance. Taft-Hartley Trust, labor unions, let it go. Taft-Hartley Trust, labor unions, let it go. Debt creditor groups, group of people who owe debt creditor, what? Okay. People who owe money to car dealers, personal loan, companies, etc., insurance used to pay off balance of the specific debt upon death. That's so easy. Debt creditor groups, that's so easy. Blanket policy used to insure a group of students or employees. Blanket policy used to insure a group of students or employees. Blanket. Students or employees. So blanket. Think about a baby or think about a child. When you think about a child, you think about a student. Okay, blanket policies used to insure a group of students or employees. Okay. Group insurance terms. Application. Listen at this. Group insurance terms. Okay, group insurance terms. Application filled out by the employer. Application filled out by, this is learning the characteristics of how group insurance operate. Excuse me. Okay, so with a group insurance, the actual employee does not fill out the application, the employer does. Then they're given an enrollment card filled out by the employee, basic information, and that's filled out by the employee's basic information, right? Okay, underwriting is simplified. The employee is at work, therefore adverse selection is minimized. Okay, so the underwriting process is simplified. You're at work, hey, you in there. Certificate of coverage, certificate of coverage, certificates are issued to covered employees. So it's a certificate that is issued on behalf of every employee. Employer receives them and maintains the master policy. So the employer receives the master policy. This is, come on, you're gonna remember this. This is group insurance. It's telling you how group insurance operates, behaves, the characteristics of group insurance. You don't fill out the application yourself. The employer fills out the application. There's an enrollment card that has the employee's basic information on it. Underwriting is simplified. You're at work that day, so hey, that settles it. Certificate of coverage is distributed or given, issued, covered employees, employer receives the main master policy. Beneficiaries, a beneficiary can be anyone except the employer. Lump sum death benefit only. Okay, you at work, you ain't got time, baby. You, hey, I want to pay this. I want to, no, honey, just gonna get a lump sum because you just work here, right? It's not gonna be as if you was with that company by yourself. You got options, right? But with a group rate, you got one option. That is the lump sum. Okay, types of coverage. Annual renewable term is coming. So each year it has to be done over. All right. Contributory versus non-contributory. Contributory. Non, honey, are you contributing or not? Right? Let's see what it's talking about. Non-contributory, the employer pays the entire premium for everyone. Non-contributory, 100% participation is contributory plans. The employee pays for part of the premium to avoid adverse selection. 75% of the employees must participate. Voila. I'm not reading it again. That was easy peasy. Group insurance eligibility requirements. Group insurance eligibility requirements. Length of service and salary level used to determine eligibility. Full-time, part-time must be full-time to receive benefits. Listen at this. Length of service and salary level used to determine eligibility. Listen, length of service and salary level used to determine eligibility, right? Full-time, part-time must be full-time. You cannot get insurance benefits as a part-time employee. To get a group rate, you have to be full-time, right? Active at work, cannot be out sick on the day of eligibility. Remember, being at work is what qualifies you and avoids adverse risk, right? Okay, so you have to be at work that day. Probationary period, usually 90 days, compared with group disability and probationary period. So probationary, this is so easy. Come on. You're going to remember this. Eligibility period, 30 days to apply for coverage after the 90-day probationary period. If employee does not, most of you have already encountered this on your job or a job, okay? Eligibility period, 30 days to apply for coverage after the 90-day probationary period. If employee does not apply, then a medical exam may be required, even for non-medical plan. Okay. Convertible group life insurance may be converted to whole life without a medical exam for the same face amount. However, it would cost more. Insurance may be converted to whole life without a medical exam for the same face amount. However, it would cost more. Let's say that one more time. Convertible group life insurance may be converted to whole life, may be converted to whole life without a medical exam for the same price, but however, it would cost more to have it. Excuse me. I'm sorry, guys. All right, so that was pretty easy. Okay, Social Security, purpose of funding, types of OASDI benefits. All right. Purpose of Social Security was designed to be a cushion to ease the burdens of old age, death, and disability to act as a safety net. What was the purpose of Social Security? It was designed to be a cushion to ease the burdens of old age, death, and disability. That is so easy. I know Nikki is probably like, yes, because this is her area. Purpose of Social Security was designed to be a cushion to ease the burden of old age, death, and disability, to act as a safety net. It's funded by payroll taxes, the tax paid by both employee and employer, and the self-employed. Pays benefit to retired workers. To qualify for benefits, a worker must be insured. In order to be insured, a participant has worked and paid the mandatory payroll tax known as FICA, Federal Income Contribution. That's so easy. That is so easy. We've known that. And we know FICA hits our check faithfully. Ain't that right? So we just talked about the purpose of Social Security, right? Okay, so types of OASDI benefits. OA, survivor and disability income. Okay, OASDI, OA, survivor and disability income insurance. Retirement is one of them. Fully insured workers is eligible for 100% of his primary insurance amount, PIA, as a retirement benefit if the worker has reached normal retirement age as established by Social Security. All right, I'm looking for you to be in these comments, Nikki, on our YouTube channel. Retirement. A fully insured worker is eligible for 100% of this primary insurance amount, PIA, as a retirement benefit if the worker has reached normal retirement age as established by Social Security. Survivor: if a covered worker dies, certain survivors are entitled to a lump sum death benefit. The surviving spouse and children will receive a monthly income benefits. Y'all, this is so easy. We're talking about Social Security and its characteristics and old age survivors of disability insurance, right? Disability: if a fully covered worker has met the definition of total disability, he or she can receive 100% of the PA each month through the period of disability. The worker's spouse and children can also receive a reduced benefit. That was so easy. That was so easy. Insurance: what should I know? Insurance: what should I know? All right, 3 income periods. Older people are no longer working for a living. All right, you got 3 income periods. Family dependency period is the first one. Makes sense? Family dependency period. Families who have children at home, right? Hello, somebody, that'll be me. Okay, pre-retirement blackout. Okay, when children have what? Moved away. God bless you if you in that season. I'm kidding. I don't want my children to move away. Retirement period. So we talk about 3 different periods, right? We're talking about a family dependency period, a pre-retirement blackout, and a retirement period. Older people are no longer working for a living. 3 income periods. Family dependency, the children at home. Pre-retirement blackout, when the children move away. Retirement period, older people are no longer working for a living. That's so easy. Alabama insurance law: all licensing candidates, overview insurance commissioner, insurer licenses, producer licensing, producers appointment and termination, prohibited actions. Come on. All right. Insurance commissioner appointment by the governor. All right. Powers of the commissioner: enforces the provision of the insurance law. Powers of the commissioner: this is the authority that the commissioner have, okay? Enforces the provision of the insurance law, right? That's easy. Conducts examination of insurance companies, examines insurance companies, supervises and administers the insurance department. Makes sense to me. Insurer licensing: an insurance company may transact business in Alabama after obtaining a certificate of authority. This is the insurance company's license. That makes sense to me. That was pretty simple to me. So you're going to be able to know what it is and what it ain't, right? What is a commissioner's authority and what it is not, right? Insurance: what should I know? In order to sell, solicit, or negotiate for any type of insurance, one has to be licensed for that line of authority. Hello, somebody. One needs to be what? Licensed for that type of authority. I need to say that one more time for everybody in the back, front, side, up, high, down, low, everywhere you go. You need licenses for the line of authority that you are pursuing. What do we need to do? Pass this test so we can get permanently licensed. What do we need to do? Pass this test so we can get our license. In order to sell, solicit, or negotiate for any type of insurance, one has to be licensed for that line of authority. We are not settling for a temporary license. Thank you, but I want more. Resident producer license requirement: be at least 18. So you need to be at least 18 years old in order to pass the sell insurance. I asked my children, Listen, grant me one request. When you turn 18, could you please take this test? Because I want this thing to go and to grow. I want my children to be a part of this. Be at least 18 years of age, right? Not committed any act which would be grounds for denial, suspension, or revocation of a license. Hey, they don't want you out here doing legal stuff that ain't right. Talking about you want to sell insurance for them. So complete and approve pre-licensing course, right? That's what we're doing right now. Pass the appropriate written exam. That's what we're trying to do next. And then pay the required fees. Hello, somebody. We're going to do that. We're going to do it. All right, insurance. What should I know? A temporary insurance license may be issued for up to what? 6 months. We're not settling for just 6 months. We want what? We want more. We sing a song at church. I want more. I want more of you, Jesus. We want more. We don't want just 6 months. We don't want temporary. We want to have more. After failing, listen, after failing 2 attempts on a given pre-license exam, you must wait at least 3 months to attempt the test again. So we want to do what? Pass it on the first try. That's what we want to do. We want to pass it on the first try. Okay, this is important to know. This is important to know. So duration of license is life as long as renewal fees are paid and continuing education requirements are met. You can have this for the rest of your life. You just got to do your continuing education, okay? You got to do your CEUs. Continuing education requirements are made, and the fee that it costs to do your CEUs, okay? Maintaining records. You must maintain records for no less than 3 years. Keep any paperwork for your clients for at least 3 years, okay? Personal status changes, name, address, etc., must be reported to the insurance commissioner within what? 30 days. Continuing education requirements. Hear me out. Continuing education requirements are 12 hours each year after the first year as a licensed agent, right? You are exempt from the CE requirement if you are at least 60 years old and have been a licensed agent in the state of Alabama at least 15 years. Won't he do it? That's a blessing. That's a blessing. Insurance, what should I know? Producer, appointment, and termination. The insurance company appointing you will file a notice of appointment with the insurance department within 15 days of executing your agency contract. The commissioner will certify your eligibility within 30 days. If you are not eligible, the commissioner will notify the company within 5 days. Okay, so the insurance company appointing you will file a notice of appointment with the insurance department within 15 days of executing your agency contract. The commissioner will certify your eligibility within 30 days. And if you are not eligible, the commissioner will notify the company within what? 5 days. A company terminating your appointment must notify the commissioner of the circumstances. If you lose, they're going to have to notify the commissioner of the circumstances within 30 days and must notify you within 15 days. Fair enough? Insurance, what should I know? Forbidden practices. Forbidden practices, control business, prohibited from selling only to friends, family, and business associates, must sell insurance to general public, okay? So we need to sell what we have to the general public, okay? Not just to our family and not just to our friends, to the general public, okay? Split commissions, prohibited from splitting commissions with non-licensed people. Cannot split commissions with a person that does not have license. Rebating, prohibited from paying customer a part of commission. Can't do that. This stuff is simple. Twisting, prohibited from replacing a policy with a lower grade policy. That's called twisting. Remember these terms: control business, split commission, rebating, prohibited from paying customer a part of the commission, twisting, prohibited from replacing a policy with a lower grade policy. Churning, prohibited from replacing a policy with like policy just to generate commission. That's called churning. Misrepresentation, agent must know their products in order to what? Sell them. So that's why you need to study your POL. That's why you need to stay close to your team players and your upline so you can understand what it is that you're doing so you won't give misinformation. Okay, it happens, but the closer you stay plugged in, it lessens that chance of happening. Okay. All right, agents, insurance. What should I know? In the state of Alabama, agent may be a person, firm, or a corporation that represents the company's best interest. Captive works only for the company, may be either licensed as a resident, lives in the state, or non-resident, lives outside the state. This is stuff that it just comes natural. It just flows so easily, okay? A broker is the customer's best interest and is appointed to sell for many insurance companies. I think we know this, right? Agent can be for it could be an actual agent represents the company's best interest. Captive works only for the company, may be either licensed in the state of Alabama or out. A broker, it sells to what? Many insurance companies, must be licensed. Solicitor, find prospects for agents. Brokers does not sell insurance, must be licensed. Solicitor, find prospects for the agents. Okay. We don't have that type of situation. Consultant advises prospect insurance products and charges fees. Okay. Insurance, what should I know? In the state of Alabama, based on Alabama state law, if the applicant pays a premium with their application and dies before the policy is issued, listen up, the insurance company will pay the policy in full if the insurance company would have issued the policy had the insured lived. So if a situation was normal and everything went fine and they were perfect health and the insurance company had no reason why they wouldn't have issued that plan, they have to pay because they got that what? First premium. You die, we pay. Isn't that what we learned earlier? You die, we pay. Okay. Approval of policies. Approval of policies. I wanna say something here, going back to what we just covered. Okay. I want to go back for just a split second. It says if the insurance company would have issued the policy. So if the insurance company is in the midst of the underwriting and they find some stuff that wasn't disclosed, some illnesses, some sicknesses that they, that was not disclosed to the agent, they're not going to pay and they're not obligated to pay. Because if you did not disclose the truth, if you did not give the correct information, the company is not obligated. Life insurance candidates. Approval of policies, required policy provisions, life insurance and annuity advertisements, life insurance solicitation, disclosure, illustration, life and annuity replacement. These are just things that we fixing to wrap up, okay? Because we're on 72 and we're going to 76. So this is all that's coming up next, okay? Annuities, suitability and disclosure, mirrors and insurance, Alabama Disability Insurance Guarantee Associates. All right. A life insurance policy or annuity contract must be filed with and approved by the commissioner before it can be used in Alabama. A life policy or annuity contract must be filed with and approved by the commissioner before it can be used in Alabama. Filings must be made at least 30 days in advance of any delivery date. That's simple. We ain't going to overthink that. Policy. Surrender insurance companies have up to 6 months to send money to the policy owner. Have up to 6 months to send the money to the policy owner. Policy surrender. Insurance company have up to 6 months to send the money to the policy owner, okay? Incontestable. Incontestable policies are incontestable after 2 years, as long as the premiums are paid. So nothing can be contested after 2 years, okay? Advertisement. It is illegal to refer to premiums as deposits, investments, or deposit premiums, okay? It's a play on words. You got to use the right terminology. Premiums are called premiums, not deposits. Conservation. Any attempt by a company or agent to maintain an existing policy, a notice of replacement must be given when you are replacing a policy. Okay? Conservation. Conserve. Any attempt by a company or agent to maintain an existing policy, a notice of replacement must be given when you are replacing a policy. All right. Insurance, what should I know? Policy provisions. Disclosure. Illustrations must include the name of the insurer. Disclosures must include the name of the insurer, initial death benefit, and the name and address of the producer. Producer is the company. Okay? The 3 legal illustration types: basic, supplemental, and enforced illustrations. Basic, supplemental, and enforced illustration. 3 legal illustration types: basic, supplemental, and enforced illustrations. Life and disability insurance guarantee associations. Maximum liability for cash value is $100,000, and maximum liability for all benefits, including cash value, is $300,000. $100,000, $300,000. Life and disability insurance guarantee associates, okay? Health insurance claims must be paid within 30 days. Insurance, what should I know? Life and annuity replacement. Alabama law requires that you must submit with every application to your company a statement signed by you and the applicant, indicating if he owns existing and forced policy or contracts, okay? Suitability. Suitability. Suitability regulations, which requires companies to establish monitor system so producers can have understanding or annuity purchasers' financial profile in order to make suitable recommendations. Suitability. Suitability. Regulations which requires companies to establish monitor systems, okay? All right, disclosure describes the specific annuity you are recommending to your client. Disclosure. It's just giving your due diligence and letting the client know exactly what it is that they are receiving. Fair enough. Okay, insurance, what should I know? Life, health, auto, or homeowners insurance may be purchased at the age of 15 in the state of Alabama. A policy can be purchased on your own life or another person in whom you have an insurable interest. I know you're not going to leave us out here. What is insurable interest? Love and affection. Be related by blood or law, or have a business interest. That is insurable interest. You have to have an insurable interest before you put insurance on a person. Consent. The person being insured must give his or her permission. Disability insurance claims must be turned in within 90 days from the event. Disability insurance policies have a 10-day free look. Check it out for 10 days, right? Must be turned in within 90 days. Health insurance must provide a mammogram for women 50 years or older once a year. That's easy. Medical policies have a 30-day free look. 30-day free look on medical policies. All right. once again, welcome to El Shaddai Life Team. And it says, see y'all at the top because the bottom is too crowded. Guess what? We covered the entire study course in 3 sessions. Guess what? You have access to those 3 sessions. You have them in the group me, the first 2, and I have created El Shaddai's Life Team YouTube channel where I'm going to be uploading these study groups as well so you can play them over and over again. What I would like to see you do is take these lessons, go and collaborate with your You Could Pass material, study your You Could Pass, and listen. This is the end of August. September is rushing in. Let's get these tests scheduled in the month of September. If you put off for tomorrow what you should be doing today, you're going to keep on putting off for tomorrow what should be done today. Go and study this and take this test while the information is fresh in your brain. The further and further you get away from it, the further and further the information is going to be, and it's going to be harder to remember those things when you need to take the test. Listen to these sections, and I want you all to schedule a day and plan to take this test. We're not taking 6 months to go and take this little bitty test. We're going to take this test and we're going to knock it out. I want to thank you again for chiming in, for viewing this. If you know anybody else that's studying to pass their state exam, please share the videos, share the study sessions that's been provided by El Shaddai's Life Team. And I appreciate you again. Again, my name is LaSheila Jones, and I am speaking on behalf of myself and my husband, Barry Jones, and this is El Shaddai Life Team. See y'all at the top. Y'all be blessed, and thanks again.